Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago soybean complex. I'll start with Chicago soybeans themselves. The market continues to move in the general direction, moving up and away from the congestion zone previously highlighted, made up of the lesser Fibonacci lines at 1400, 1389 and 1378. These three had halted any falls in this market since late July and actually held up the market in August, September, the start of October, most recently the end of October. This was to me an ammunition gathering exercise for a move higher. Additionally, we have the results of the larger process in operation, the July to late October descending triangle, which I had highlighted in dark blue on my daily chart. The upper trend line used was now the defunct mid-August to date downtrend, backed up a little higher up for most of its time by the then paralleling and declining, but now sort of going sideways really and upwards, medium moving average currently at 1429. Whilst below those same levels of 1400, 1389, 1378 act as the base of the triangle. This week, for a second consecutive week, prices have punched up and over the 50% Fibonacci line of December 2020 to February 2022 move at 1451, and utilizing the base of the medium moving average to do it from. It's time to apprise the potentials on the upside from the descending triangle pattern. Thus, as I said 4 weeks ago, and I quote, "So taking all that into account, a primary target X would be in the 1545 area, and a secondary and much harder to reach target X1 would be in the 1605 area." End of quote. I also added 4 weeks ago something which has turned out to be very prescient, and I quote, "So what have we topside that might get in the way?" Well, to be honest, not much, which is why I'm a little surprised and concerned that prices have not moved higher than they have. You see, we have highs in September at 1493 and 1508, but the next clear resistance topside is a band between 1521 to 1534 containing the flatlining long moving average. The long moving average is now dipping lower, but it's currently at 1521. And the 50% Fibonacci line for 2022 at 1532. End of quote. Prices this week are easing up over the lesser Fibonacci line at 1478. And bar the earlier highs, we ought to see a free rise higher towards the 2014 high at 1522. However, two new factors may be entering the frame from above. Firstly, we have the April 2020 to date downtrend currently at 1518. And then there is the long moving average, which is starting to arch lower and move below the 2014 high. Watch this space. Chicago soybean meal. We have had here and have here still for months now different patterns, not so much melding in with each other, but rather crashing in and out of each other. The most recent here has been the weekly key reversal up seen last week, but I will return to that shortly, as it is still not the main pattern here, surprisingly. The main pattern continues to be the May to date seemingly broken then repaired ascending expanding wedge pattern, something I pointed out many months ago. This has developed currently 411.10 to up off the top of my daily chart so far, then it really doesn't matter right now. It is not a perfect pattern by any means. To assist in seeing this pattern, I've highlighted it in dark blue. The latest on this has been last week's weekly key reversal up that mended the many and varied breaches and breaks of the lower trend line, currently at 411.10. That lower trend line is also the neckline of the huge December 2021 to June 2022 head and shoulders continuation pattern. This second earlier pattern had been the signature pattern here since last year, and you can see how it resonates even now. All this now sets up the retirement, I guess that may not be the right word, perhaps the hibernation. The hibernation of the targets below for the ascending expanding wedge pattern, as it's still a pattern in formation. Thus I will hibernate the primary target X in the 367 zone and the secondary target X1 in the 342 zone. So what do we have on the top side now? Well, the early August highs in the 468 even area. Interestingly, the market has filled in the changeover gap from August, but that high could be a first port of call. Then the 2021 high at 471.40. I could say the neckline currently at 469.30, But I have a suspicion that between the high and the neckline, the market will regard them as one area. Then there is the June 2014 high at 479.30, which I am not sure is that good a resistance, before looking at the March high at 491.60. Chicago soybean oil. A lot of lines here because a lot of things have been going on, but things should get simpler after today. The key recent features here have been: 1. The bow tie formation in late October that showed the initial bullish nature of the market at the crossover of the moving averages, and I suppose showed the subsequent bearish nature that the market turned into during the week of the 15th to the 22nd of November. We should start to see the start of a major move in the next direction of the market. The more immediate factors that now need addressing are: 2. The broken lower time, currently at 74.16, highlighted in dark blue, of the December 2021 to June 2022 bullish Andrews pitchfork. And point 3. The lower time, currently at 59.86, of the December 2021 to June 2022 bullish Schiff pitchfork, which I've highlighted in bright red. The broken lower time I've kept on the daily chart since late September because though it had been broken, it still showed the bullish angle of attack until last week, when in a spectacular gapping in parts weekly key reversal down, it was finally broken, properly broken, and I'll retire it after this commentary. This now leaves a shallower bullish shift pitchfork of the same move, and the market is now approaching, very cautiously, the lower time. The reason for this caution is that the lower time, currently at 59.86, may be the gateway to a whole series of other supportive features. These include the 2011 high at 61 even, which is currently being tested, the rising 2020 to date uptrend, currently at 59.69, which is highlighted in purple, and the supports at 59.44, 58.82 to 58.16, that have inside them the August 2011 high at 58.59. Plus the September 2012 high at 57.64. That may explain why all of a sudden the last 3 days, including today, have shown limited attempts lower. Meanwhile, topside we have resistance at the 50% Fibonacci line of the January 2021 to April 2022 move at 64.09. Though this doesn't look that good as a support on the way down, and when the flatline and then the flatlining medium moving average currently at 66.97. Then there's the gap 67.01 to 67.38 and a slowly arching lower short medium moving average currently at 68.37. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final part.